On the program today, Afrexim Bank commits $400 million to Mozambique LNG project. South African Central Bank cuts bond buys to 2.5 billion rand in July. And Morocco weighs $2 billion in bond sales as virus sparks rethink. Hello and welcome to Business Incorporated. I'm Chimizi Obi Iwagu. Let's get the show started with the markets. And the market here in Nigeria and the South African market went sideways at intraday. The NSE All-Share Index was up 0.16%, sustaining the positive momentum seen since the beginning of the week and led by the banking sector stocks. The JSE Index in South Africa, on the other hand, plunged as 10-cent fall hits Naspers and Prosus. Egypt is closed, but the blue chip index added 1.06% on Thursday, extending gains for a fourth session, with Commercial International Bank rising 2.1%. Kenya closed positive on Thursday. And markets in the Middle East started the weekend holiday on Thursday, and major Gulf markets there closed Thursday in the green, led by gains in financial shares. Dubai's main share index rose 1.36%, led by a 1.4% gain in Emirates MBD Bank, while the Abu Dhabi index was up 1.25%, with First Abu Dhabi Bank rising 0.7%, while telecoms firm Etisalat added 1%. Elsewhere in the region, the Qatari index jumped 0.96%, helped by a 2.4% increase in petrochemical firm Industries Qatar, while Saudi Arabia's benchmark index gained 0.40%, driven by a 1% increase in RG Bank. And stocks in Asia Pacific were mostly lower on Friday as tensions between Beijing and Washington weighed on investor sentiment. Hong Kong's Hang Seng Index led losses among the region's major markets, dropping about 1.8% as of its final hour of trading. Mainland Chinese stocks also declined on the day, with the Shanghai Composite down 0.96% to approximately 3,354.04, while the Shenzhen Component shed 1.548% to around 13,648.50. Elsewhere in the region, the moves were more muted. Japan's Nikkei 225 slipped 0.39% to close at 22,329.94, while the Topix Index shed 0.2% to end its trading day at 1,546.74. Shares in Australia declined, with the S&P ASX 200 down 0.62% to close at 6,004.80. South Korea's Kospi bucked the overall trend regionally as it closed 0.39% higher at 2,351 points. Overall, the MSCI Asia ex-Japan index fell 0.95%. All right, let's move over to the European market, where stocks inched lower on Friday morning ahead of a key U.S. federal job report and amid rising tensions between Washington and Beijing. And that's where we are going to kick off our conversation with Conrad. Hello, Conrad. Good afternoon. Good to see you.
Good afternoon, Chibi. Thank God it's Friday.
Oh, thank God it's Friday. In any case, the U.S. president has, shock waves through the markets again with the announcement to ban not only TikTok, but also the Chinese messaging service WeChat. Nasdaq and many American tech stocks have profited and risen to near record levels. What's the reaction in Frankfurt on the markets there?
Well, Jimmy, there's no real immediate reaction in terms of share prices. Look at what the German share index DAX has been doing today. Of course, trading has been shaky up until a couple of minutes ago, which probably also had to do with, the nervousness that was caused by those decisions by Donald Trump. The increase here during the last 10 minutes or so has to do with very positive American employment data. The unemployment rate for the month of July fell to 10.2%. That's a positive development on the labor market in the U.S. The announcements by the Trump administration to ban TikTok and also ban WeChat, of course, is not something that people here are welcoming. The idea, the perspective that America might become a country like China with, a secluded, a blocked internet that will not allow traffic, go easily over borders, is something that people here in the, global-oriented economy in Germany would like. That's not something that you want to hear from the leader of the free world, is what one trader told me. In terms of the users of those services, in particular TikTok has also millions of users here in Germany. This is a young and flexible and innovation-friendly crowd. If one service doesn't work, it's likely that they will find another service, an alternative one, very quickly.
Meanwhile, the German economy is showing strong signs of recovery from the pandemic. Official statistics out today show exports came roaring back in June.
I think we have sound
almost
problems, but
15% month on month. But this is not sparking demand for shares on the Frankfurt market. Well, we seem to have lost Conrad there. We hope to get back to him as soon as we're able to rectify that. Okay, in the UK, the Chancellor Rishi Sunak had his breakfast broadcast rounds this morning. Among the most important comments he made was the low likelihood of a furlough extension and hopes that a Brexit deal can be done in September. Well, let's see how that is being digested this intraday with Juliana Olainka on board. Good afternoon, Juliana. Well, Chancellor Rishi Sunak today signaled that there is unlikely to be an extension to the furlough scheme. How is this comment being chewed on the market streets?
Good afternoon, Chimese. Well, there's no surprises here, really. It couldn't last forever. I think the furlough scheme, if you take it from when it started to when it will end in October, that's 8 months of the government paying for people's wages. And it's not really the government's money. This is taxpayers' money. So every single person who works and pays tax in the UK will have to pay this money back sometime. Got to say it was affected by the markets because really, without a vaccine, what Britain is going to be looking at come October is mass unemployment, definitely a spike in bankruptcy, and that is going to hurt. You said Chancellor Rishi Sunak has been doing his rounds of the media this morning, and that actually was backed up by the Bank of England Governor Andrew Bailey, who also said he believes it is about time for the furlough scheme to run out. It's unfortunate that it's got to happen, but it's certainly done a lot. It's been heralded as a world-leading scheme. For those who don't know about furlough, and I'm sure everybody knows about furlough, it was a government subsidy scheme where the British government were paying up to 80% of people's wages from, I believe, March until August, up to £2,500. That's been reduced now to 60%, and employers have to contribute to national insurance. So it has done basically what it was supposed to do, which is really to try and maintain employment for individuals. But as I said, it has to taper. The banks were under pressure following those announcements. I believe Lloyds were down 2.3%, Barclays were down 2.2%, and the all-share at intraday is down 0.04%. The FTSE 100 is also down 0.08%, and the FTSE 250 is up slightly by 0.10%. In currencies, the pound is down on the US dollar by 0.43%, up on the euro by 0.09%, and down on the Japanese yen by 0.25% at intraday.
Well, energy regulator of GEM has lowered winter energy bills for 15 million UK homes by reducing its energy price cap to record lows after wholesale energy market prices tumbled during the coronavirus pandemic. What would that mean for you, Juliana?
Well, what it means is that energy bills will be cheaper by, I believe, between £84 and £94, depending on what your averages is. This is great news, of course, for loads of people that have been struggling during the pandemic. Will you feel it? You're likely to, but this is the first time in a long time that the regulator has set the cap so low. I believe the cap now for energy bills are £1,042 per year. As you said, this is mainly due to the decrease in the amount of gas prices. So it's a great news. There were a couple of industry leaders that were questioning whether or not this is great for energy suppliers, because as with most businesses, not all, most, they have suffered because there have been payment holidays, and there are some people that just quite frankly cannot pay their bills. And on top of that, of course, they've now got this price cap, but the regulator thinks it's the right thing to do. And not only are they saying that the price cap should be held in 2020, they also believe that it should be held in 2021.
And it's been a week full of activities. What was most striking for the market, and what is the outlook for next week?
Well, we had a little bit of breaking news actually just before I came into the studio, and that was from British Airways. We haven't actually had an official statement from British Airways, but Unite Union, a major union that look after cabin crew, have said that British Airways have let go of 4,000 staff. Apparently an email has been let out. They're not happy about that. They are going to be taking British Airways to court. We already knew that British Airways, the UK national flag carrier, were trying to, or in consultation about letting 12,000 of their staff go, because of course, like with many sectors, but particularly with the airline industry, they have been battered by COVID-19. They've been in a long-running dispute with the unions looking after cabin and pilot, because the unions believe they've got enough money in their coffers to survive this. They've been accused of firing and rehiring, bringing back staff under worsening conditions and less pay. So the breaking news out of there is that 4,000 staff will be going. And then, of course, really, I think out of the UK, the biggest thing that's happened this week is the labour market and just how many jobs have been going. We had jobs from DW, we've had news about Pizza Express, and there have been so many that are happening every day. Yesterday, the Bank of England Monetary Policy Committee, they did unanimously vote to keep interest rates at 0.1%, but interest rates could potentially go into negative territory just to try and, make the banks borrow again to try and stimulate the economy. We're looking at a 9.5% drop in GDP for the UK this week. So, it's a little bit of a gloomy look, I've got to say. But, the summer holidays are still here. We got fantastic weather over the weekend. But again, we can't really enjoy it because lockdown has been put on a hold. So mix and mash. But I've got to say, out of the UK this week, the labour market is clearly grabbing the headlines.
And we remain optimistic for a better week next week. Thank you, Juliana. Well, we'll get back to Frankfurt. Conrad is back. Well, Conrad, just before you left us, I was asking, the German economy is showing strong signs of recovery from the pandemic. Official statistics out today show exports came roaring back in June, growing almost 15% month on month. But this is not sparking demand for shares on the Frankfurt market. But though, looking behind you there, I could see the DAX going up.
Yes, it's been going up in the, I would say, last quarter of an hour or so. But, this is not really because of the relatively strong export data for the month of June in Germany. It has more to do with the unemployment rate and the latest data from the US labor market, which just came in a couple of minutes ago. The unemployment rate is going down in July and a bit more strongly than what economists had forecast. In terms of the exports here in Germany, yes, they are relatively strong in June, but the level of exports and also industrial production is still significantly lower than before the corona crisis and also significantly lower than in the same period of time last year, which means if you are in a job and furloughed, put on hold, so to say, because of the crisis. You cannot relax. Also, businesses that already were in trouble before the corona lockdowns, they really have to make up their minds how they can generate profits in the medium and in the long term. And let's not forget, the big question is and remains, what happens if we see new waves of infections and potentially new lockdowns? This is a nervousness that has not managed to go away, not even with those very strong June export numbers.
All right, thank you very much, Conrad. Well, I guess I could say now, thank God it's Friday. Enjoy the rest of the weekend, Conrad. All right, we'll take a quick break, and when we come back, of course, we'll bring you more, and of course, we'll also cross over to South Africa and see what's happening there. Do stay with us. All right, we'll start off this segment in Mozambique as African Export-Import Bank has committed $400 million in loans and guarantees to Mozambique's $20 billion liquefied natural gas project. Afrexim's move follows a similar commitment for the same sum by the African Development Bank last month. The Mozambique LNG Area 1 project is ranked Africa's single largest foreign direct investment to date. It will consist of 2 LNG trains with a total capacity of around 13 million tons per year. French energy major Total, the operator, has secured a $14.9 billion senior debt agreement, the biggest project financing Africa has seen. And Morocco is considering sovereign bond sales of about $2 billion in late September as the coronavirus prompts it to increase its reliance on international debt market. The kingdom is pondering one issuance of €1 billion and another of $1 billion, each with a maturity of at least 5 years. The new Eurobond will either roll over or be used to redeem a previous issue that matures in early October, while the dollar-denominated sale will be used to build up the North African nation's foreign currency reserves. The amount under consideration is about double that Morocco was previously mulling for its return to the sovereign bond market before COVID-19 hit. The $130 billion economy, which relies on tourism, agriculture, and exports to Europe, is facing a 5% contraction in 2020, its first recession in decades. And in South Africa, data from the central bank shows it has further cut its government bond purchases in July, buying 2.5 billion rand worth, or about half the amount it bought in June, to bring its total holding to 38.4 billion rand. Rampant selling of government debt in March and April as the coronavirus struck forced the bank into emergency liquidity measures, including a quantitative easing style purchasing of bonds in the secondary market. At its rate meeting 2 weeks ago, when the bank clipped lending rates by 25 basis points, the governor stressed the bond buying was to support liquidity rather than finance government's ballooning budget deficit. In May, National Treasury upped the weekly amount on debt on auction of nearly 2 billion rand. Well, South Africa's rand traded nearly 1% weaker early on Friday, near its lowest in 10 weeks amid soaring emerging market sentiment led by Turkey's currency crisis and increased tension between China and the United States. Bonds firmed with a yield on the benchmark 2030 government issue down 1.5 basis points. For the week's market wrap-up, I'm being joined by our South African business correspondent, Zingi Mandayi. Hello, Zingi. Thank you for joining us.
Good evening. Thank you for inviting me.
Well, this week saw a number of data like the PMI published and, of course, a couple of earnings. Which of these was a market mover in the week?
Okay. Currently, the JSE index is flat in South Africa, down by minus 1.28% at the time coming on air. And also, manufacturing, we saw on Thursday, we saw manufacturers like companies like Mondi, and they reported strong first half earnings, resulting on heavyweight companies like your BHP Group, mining companies, and also Anglo American, and they also claimed on raising the iron price. And also, investors, they are waiting for the U.S. Corona fiscal package to see what's going to happen next week.
Now, during
Thanks,
during the week, South Africa retailer Shoprite indicated it's mulling leaving Nigeria. What reactions did you get on this from both South Africans and, of course, Nigerians living in South Africa?
Okay, yesterday I spoke to economic analyst Kaya Stolle based in KZN, and also he said that business fees might have contributed to the fact that Shoprite closed in Nigeria, or considering closing in Nigeria. And also, when I spoke to another economist, Bugani Ngoma from KZN as well, he also mentioned that if you look at Woolworths and also Shoprite, in terms of the market, they're similar. And also now the consumer, they didn't research their industry very well in Nigeria. And also, he also mentioned that Nigeria, in terms of the market, is not that as smooth as South African one. He also mentioned the issue of nationalism, saying that maybe Nigerians, they prefer buying from their own people instead of maybe South African companies.
And just yesterday, MTN, of course, announced it's exiting Middle East to focus on Africa. Why are South African companies divesting at a time like this? What soundbite are you getting on this?
The issue of MTN in Nigeria, as reported by the CEO of MTN, Rob Shatta, he actually mentioned that the Middle East environment is becoming increasingly complex. So I spoke to Dr. Clifford Chokubuza, who was based in the UK. He was also saying that in terms of the US sanctions, if you look at Afghanistan, Syria, and Yemen, those sanctions by the U.S. He also mentioned that if ever the market is caught up on those sanctions, it's so much harder to balance the market.
Our South Africans woke up on Wednesday morning to a higher fuel price. How are the citizens taking that, particularly as they deal with the COVID-19 effect?
I mean, in terms of hiking, the petrol price is another thing in South Africa. I mean, we are in the middle of the global pandemic. And also speaking to some motorists, they were mentioning the fact that some have lost their jobs because of the pandemic. And also they were stressing out the fact that some were forced to take your salary cut. Now the petrol hike is up and they can't even pay their cars. They can't even pay bonds and all that. So they were saying that the petrol price is another concerning thing. And also, they also mentioned the fact that in South Africa, we also struggle for the unemployment insurance. Those who have lost their jobs, now they can't pay their cars because of the pandemic. And also now, you look at the petrol increase, they can't even buy groceries.
The outlook for next week, what should we expect?
Next week, it's very uncertain. I mean, for what happened this week, we saw companies like SAB halting their investment. We saw black companies like Consol also halting their investment. Like the Heineken in South Africa, retrenching people. So it's hard to say what's going to happen next week. Maybe we'll see a lot of companies closing up. We at this point we don't know. And also, if you can look at the investment that was halted by Heineken and also your SAB, it will play a huge role when it comes to investment in the country. But now, as I'm talking to you, it's so hard to say that what's going to happen next week, and as well as the whole thing of the tobacco. I mean, the tobacco industry took the government to court in terms of banning the tobacco. So they're wondering what's going to happen because they also are losing on sale. And also the ban of alcohol, also another thing that we're looking forward to see next week, if ever the president will allow or will create the ban of alcohol.
All right, thank you, Zingi, for those updates. Enjoy the rest of the weekend. And in the meantime, South Africa's financial watchdog is consulting with lawyers and the insurance industry on a potential test case to clarify whether insurers should pay rejected claims from firms hit by the impact of the coronavirus. Several lawsuits have been filed by individual firms, mostly in tourism and hospitality, after they were told by insurers that their policies did not cover coronavirus lockdowns. The head of insurers and retirement fund administrators at the Financial Sector Conduct Authority said a test case would aim to provide legal certainty in the matter. And it's on that note that we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.